Hey there, welcome to Neppy Invest. So, my favorite type of company is one whose stock price is breaking out. And in this video, I'll be focusing on 5 companies whose stock price is showing signs of doing just that. And the main catalyst behind their stock price breaking out has been the release of the half-yearly financial report. So, let's get stuck into it. So, the 5 companies I'll be looking at in this video will be the environmental group, Cardno, Nufarm, Sealink, and Bega cheese. They all have differing market caps. So environmental group is fairly low, around 15 million or so, and the largest market cap is Nufarm with $1.9 billion. So I'll go from the smallest market cap to the largest. So the first company I'll be looking at is the environmental group, EGL. Their market cap's fairly low when you look at their revenue and the fact they are operational cash flow positive by $2.2 million. Now, this is the 6-month daily chart I'm looking at here, and the share price was going sideways from about September all the way to mid-February. Then some interest came into the market for EGL. We did see the share price go from 3.5 cents to about 6.5 cents just before they released their half yearly on the 25th. So I think the share price rise was in anticipation of some good numbers in their half yearly report. And when they did release that report, we did see some good numbers. So revenue up 31%, EBIT up 955%, and profit after tax up 215%. Probably the only negative thing here was that they were operational cash flow negative by 691,000. So the next company I'll be looking at is Cardno, CDD, and when you compare the market cap, 191 million to revenue 918 million and operational cash flow 91 million, you could suspect there might be some good value here. And now just looking at the share price was moving sideways from about November all the way to when they released their half-year report on the 25th of February. And when they released that, the market really liked it and the share price rose 19%. And we did see the share price then continue to rise higher to this inverted hammer 4 days later, which an inverted hammer just usually means there's a bit of selling pressure coming into the market. And we saw the share price then subsequently fall over the next 2 trading days on lower volume, which is actually a good sign. So that was showing there could have been a good buying price just above 45 cents. And on the last trading day, the share price did rise. Now, why did the market like the half yearly? We did see some numbers down. So actually revenue was down for the half year. Even net profit after tax was down, but operational cash flow was up 16.8%. And they did declare a dividend of 1.5 cents. And maybe that's the reason why the market reacted positively to this company, or just the fact that there is potential that this company is undervalued. Next company I'll look at is Bega. This company traditionally is a cheese company or cheese production or producer, but they're becoming more diversified. I do believe they bought Vegemite and they're buying peanut butter companies, that sort of thing. So they're becoming a more diversified company as they make more and more acquisitions. So the market cap, $1.8 billion with revenue of 1.5 billion and operational cash flow positive 107 million. You see the chart on the left hand side there is a positive trend from all the way back to July. Share price then was about $4.80 and the most recent share price was around $6. You can see what they made the acquisition in the middle of November. There was a capital raising with that, and then they released their results on the 24th of February. And the market did react quite positively to that. And we have seen a bit of a flag develop since then. And the share price was in an area where if you're quite bullish about this company, you could have made a bit of a buy around the $6 mark. Now, I have included their half-year results on the right-hand side. You do see a lot of the numbers down. You can see revenue down from 741 million to 707 million, and operational cash flow down from 38 million to 7 million. But a lot of the other numbers were up. You can see earnings per share up from 4 cents to 9.6 cents. Net profit after tax up from 8.5 million to 21.7. So some of the things I look for in regards to the performance of a company, revenue and operational cash flow, they're actually down, but a lot of the other things other people look for with the performance in a company, EBITDA, net profit after tax, they're all up, and maybe that's the reason why the market reacted quite positively to the release of their half-yearly results. And the next company I'll be looking at is Sealink. And when you look at their results for the half year, you really can't probably argue that maybe the results weren't quite as good as the market said they were. So revenue up 329.5%, EBITDA up 265.3%, and operational cash flow up 97.3%. Now, I have a feeling that might have been an acquisition in the past that really put a supercharged rocket up these numbers, and that really helped. So it looks like it could have been a very good acquisition. I could be mistaken there. I don't know a lot about what this company has done in regards to acquisitions, but when I did look at some of the half-yearly numbers going back the last 3 half years, it does look like there was a massive jump from one half to the next half about a year and a half ago. Anyway, market cap 1.8 billion, revenue 1.1, and operational cash flow 124 million. So very similar numbers to Bega in those raw numbers anyway. And another good looking chart here from Sealink. So this is exactly what I want to see from a company, and an uptrend going from the bottom left to top right. So share price has gone from $5 all the way up to $8.50. And they released their half-yearly report on the 24th of February. You can see the market reaction was quite powerful on that day, with a really good share price increase on fairly good volume as well. And the last company I'll be looking at is Nufarm. This is an ag company. This is the highest market cap of all the companies I'll be looking at 1.9 billion revenue in financial year 20. So they haven't released their half-yearly numbers just yet, because they should be releasing in March 2021. So revenue 2.8 billion, and operational cash flow in the previous financial year negative 232 million. So that's an instant red flag right there. Now, you can see the share price wasn't doing much for most of the end of last year into the start of this year, but we have seen the potential new uptrend developing, and it's really helped that on the 25th of February, they did release a revenue update, and it was quite a bullish update as well. Revenue up 17% for the first 4 months, growth in all crop protection regions and seed technologies, European recovery on track. They even mentioned positive momentum has continued into February 2021. This is a very similar story than Costa Group last August. They were very bullish, Costa Group, and the share price has been going up ever since then. So this is a potential buy as a recovery story. So that's all for this video. I hope you've enjoyed it. Now, the whole point of me doing this video is to share some ideas. So quite a few of these companies I won't be interested in, but hopefully I've given someone some inspiration to do some more research on at least one of these companies, and hopefully there is a potential buy there if you like what you see. If you have any comments, leave it in the comments section. Otherwise, I'm not a financial planner or financial advisor. So if you do need any financial advice for your own circumstances, make sure you seek out a qualified financial advisor who can speak to your own financial needs. That's all for this video. See you later. Bye.